Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. And I've drawn this out to try to give you the long-term view. I've drawn the primary trend channel fairly tightly. It was fairly tight from about the breakout around 2004. And then the bottom formed in 2005, and a slow, steady rise until we had the financial crisis and the breakdown below that trend channel. It took all the way up until nearly 2011 to get back into it, and of course we rocketed right through it, way past it, corrected down, bounced off it, came up, and then penetrated into it through the downside, then up through the upside, downside, upside. But so the volatility is really extreme, but the trend channel itself is still fairly intact. You can see we're down about 80% or so towards the bottom of this channel. Now, if you do a measurement on the channel to see how much the movement is, that's why I drew these blue lines here. It doesn't really matter which cross you pick, but you can just pick one of the blue lines and go to another. This one's a good one because you can see at 2010, even though the price wasn't up here, but you can just use it as a measurement. In 2010, you get the cross right there at exactly 27.50. 1 year later, you get a cross at about, we'll just say $31. So we're looking at about $3.50 a year is this type of appreciation. So if we just stayed on this course, which I don't think we will, but if we did stay on this course, then you would see $3.50 next year, etc. It'd take a couple years to get into 40, and then we may have a huge spike, come way back down. So that's that trend channel. That's going to be a decent return because that's going to be roughly a 10% return per year. Now we know that silver has done a lot better than that of late, especially in the year 2010 was really a wild ride. It's actually up more for this year, although it's correcting back down. But the trend is 10% per year. That shouldn't be really surprising if we look at inflation, shadow stats. Maybe we're at 10%, I'm not really sure. So definitely holding its own. I think though that it is due for a much larger blow off at some point than the one that we had here. Certainly a run through 50. I can't say when that's going to be. Over to the question of the day. A very good question from Adman. Could we be all wrong? Is it possible the bull market in metals has run its course? Hi, Brother John. Thanks so much for all you do. I've been watching your videos for some time now, and I really appreciate all the effort you put into them. I've been a stacker of gold and more so silver for around 3 years now, but lately, with the non-stop sideways action and slow gradual decline in both the metals, I'm really beginning to second guess myself. Both metals seem to be doing nothing these days, and it's been that way quite a while now. Do you think it's possible that we're wrong and that the bull market in precious metals has run its course? Everyone talks about how bull markets play out in stages, and that the price will eventually end up going parabolic and have a blow off top, but who says every bull market follows this path? Isn't it quite possible for a bull market to just run out of steam and end long before people thought it would in an anticlimactic downward spiral? I just really get the feeling that this market has run out of steam. Maybe the spike when silver leaped to up to $50 last year was the blow off top and it's all over now. Maybe we're waiting for a recovery in price that's never coming. Would really appreciate you to answer the question. So, very good question, and that is something that really gets at what is your belief in the fundamentals, because if you don't have a fundamental view, then obviously if the technicals aren't going your way, you may be convinced that the market has turned and that you're no longer in a bull market. I think this chart's pretty clear that we're still in a bull market. A very violent bull market, but a uptrending market nevertheless. Now, I wanted to look at some of the fundamentals because the fundamentals for silver, as far as demand, or potential demand, I should say, they really are still so strong. And the first one I want to point out is a chart that I've cited a number of times, but it can never be cited enough. It actually goes back to 2009, but things aren't very different right now. And this is the percentage of gold and gold mining shares actually held as a percentage of global assets. And you can see the comparison is for large chunks: 1921, 1932, 1948, 1981, and 2009. And you can see as of 2009, only 0.8% of global assets were invested in gold and gold mining shares. Silver is probably not even enough to show up on the radar. So you can see that we're in a situation where we're at least 20-fold or more, 25-fold undervalued based on the amount of money that's out there that's in other assets. So based just on this alone, and I'm pretty sure it hasn't changed much from 2009, based on just this alone, there is so much more fundamental upside for the metals markets to run, just because no one's in them yet. They're not even being, there's no participation at this point. So that's one of the biggest ones that you need to keep in mind when you're asking, is there a basis to say that the bull market will continue on a fundamental perspective? Now, the other one that is really important is the interest rates. And I've drawn this one out. I used the Dow as a comparison, and you can see very clearly here that with the election of Mr. Obama, pretty much since he's taken office, the Federal Reserve or the Treasury or whoever really calls the shots, we don't know for sure, as far as interest rates and money printing, pretty much ever since Obama has been in office, they have propped up the stock market. You can see the stock market is in a bull market running from early 2009 through 2010, 11, 12, and onward towards the election. So there really couldn't be a more favorable stock market scenario for the president to try to be elected with. It's very unusual to have this type of money printing all the way through an entire presidential term. But if you look down here, this chart is the descending interest rate on the 10-year note. That's TNX daily. So you can see that the interest rate has fallen continuously. This goes all the way back to 1996, and you can see down 75%. The interest rate dropped dramatically at the beginning of the bull run of the stocks, 2009, but it is not turned up at all. And that's one of the first things that you look for in a typical technical, or like a Martin Zweig type of indicator for stocks. The first thing you're looking for is interest rates. When interest rates turn up, I think the rule is 3 steps and a stumble. In other words, after the third interest rate rise, you'll see a stumble in the stock market. And we just have continuously falling interest rates. So that is another one that is tremendously bullish for gold and silver. And of course, the reason why is that people invest their money in something to try to get a return. If interest rates are shockingly low, and this 10-year note is below 2%, and the shorter term treasuries are just ridiculous, they're basically flatlining at 0. So people look to get a return on their money. If they can't get a return on their money in bonds, then oftentimes they play stocks, and obviously that's what's happened here. But once stocks become overvalued, which I think they are becoming so, then you have to look at things like precious metals or things that are going to appreciate in a continuing low interest rate environment. So those are two fundamental reasons why I think that the bull market is going to continue, and we're just into a correction phase. These things really, they are pretty standard on the street. Although we are living in interesting times and different times, a lot of the rules on the street are pretty sound as far as interest rates and percentage of people participating. And just to finish up, to show you that, I wanted to do a brief reading of the very end of Jesse Livermore's Reminiscences of a Stock Operator. So you can see that even though things seem to have changed over time, really we're going back 100 years and you can see things haven't really changed that much. So let's read some Livermore here. The public ought always to keep in mind the elementals of stock trading. When a stock is going up, no elaborate explanation is needed as to why it is going up. It takes continuous buying to make a stock keep on going up. As long as it does so, with only small and natural reactions from time to time, is a pretty safe proposition to trail along with it. But if after a long, steady rise, a stock turns and gradually begins to go down, with only occasional small rallies, it is obvious that the line of least resistance has changed from upward to downward. Such being the case, why should anyone ask for explanations? There are probably very good reasons why it should go down, but these reasons are known only to a few people who either keep those reasons to themselves or else actually tell the public that the stock is cheap. The nature of the game as it is played is such that the public should realize that the truth cannot be told by the few who know. Many of the so-called statements attributed to insiders or officials have no basis in fact. Sometimes the insiders are not even asked to make a statement, anonymous or signed. These stories are invented by somebody or other who has a large interest in the market. At a certain stage of advance in the market price of a security, the big insiders are not averse to getting the help of the professional element to trade in that stock. But while the insider might tell the big plunger the right time to buy, you can bet he will never tell when it is time to sell. That puts the big professional in the same position as the public, only he has to have a market big enough for him to get out on. Then is when you get the most misleading information. Of course, there are certain insiders who cannot be trusted at any stage of the game. As a rule, the men who are at the head of big corporations may act in the market upon their inside knowledge, but they don't actually tell lies. They merely say nothing, for they have discovered that there are times when silence is golden. I said many times, and cannot say it too often, that the experience of years as a stock operator has convinced me that no man can consistently and continuously beat the stock market, though he may make money in individual stocks on certain occasions. No matter how experienced a trader is, the possibility of his making losing plays is always present because speculation cannot be made 100% safe. Wall Street professionals know that acting on inside tips will break a man more quickly than famine, pestilence, crop failures, political readjustments, or what might be called normal accidents. There is no asphalt boulevard to success in Wall Street or anywhere else. Why additionally block traffic? And that's the end of Reminiscences of a Stock Operator by Jesse Livermore. And it's just as true today as it was then that the public should realize that the truth cannot be told by the few who know. That's just the nature of the game. That's always the way it's been. Not so with silver, because silver is not an asset that is being pumped up to be unloaded upon a gullible public. That is often the case with stocks and may definitely be the case with stocks right now. But silver, on the other hand, is an asset that is really undervalued, and it's just on a steady course. I expect that to continue until we get another run at the highs and probably go through 50. And we'll talk to you next time.